Good morning, traders. It is 2nd of September 2022. Just going to do a really brief overview of the market. Jobs numbers out this morning, highly anticipated numbers. Unemployment came in at 3.7%. The wages came in 0.03 increase versus 0.04, which has positive implications for inflationary pressures. Jerome Powell and his team are going to be looking at that when they make a decision on whether to tighten or hike rates 50 versus 75 basis points in the coming weeks. So they'll be looking at that definitely, these wage numbers. As far as the market goes, yesterday we did kind of bounce right in this area of converging supports. I did get caught in a trade. I lost on the trade down here when this thing started ripping higher, which, that happens. When the market reverses, it reverses. So switched to scalping calls. Started off scalping puts in the morning, switched to scalping calls in the afternoon. So still recovered that loss plus some moving into the end of the day. What I'm looking at right now is levels of interest. These moving averages, they're all kind of converging right here around, what is this, between 400 and 405. So that's only like a 1% range right here. And these things are, this 100-day moving average is purple. It's going to be dropping a little lower. This 50-day is going to be moving a slightly higher. And the 10-day is this white line here. This one's going to be crashing down. It's going to be moving faster than both of these lines. So we'll see what kind of resistance they put up as price tries to move higher if this rally continues. I mean, there's so many scenarios, like it can come up, hit these lines, and then bounce back down and retest this trend before breaking and moving lower, or come down, retest, and then move higher. I expect the 50-day is upward slanting, so that one is not going to put up as much resistance as the 100-day, which is more significant anyway, but it's downward sloping. So when price is coming from below a downward sloping moving average, especially a high value one like the 100-day and the 200-day where we rejected way up here, they're slanting down. They're normally putting up a little more resistance. And likewise, when price is coming from the top, like and trend lines are upward sloping, they're going to put up a little better support. I mean, this one didn't put up much of a fight here after the Jackson Hole meeting, but you could see price broke through here, came back, retested, and then massive move up once it couldn't break free. So just keep an eye on these moving averages if you're in scalp positions, and just kind of what I do is I use these thick lines. I mean, you can do whatever you want to. You can use solid lines, whatever. But if I go down to like the 10-minute time frame, like, or 2-minute or 30-second or whatever, like I want to see where these lines are, right? You need to know as a trader where these key levels can be, because that's where people are going to be buying and selling there, right? It's a key, always key levels of support resistance, especially when you get to like the 50-day, the 100-day, especially the 200-day. All right, so I'm rambling on. Let's take a look at oil real quick. Looks like it's rallying this morning. It is about to the point where I may consider taking a shot at some longer term call options, anything with oil exposure, XOM, CVX, Chevron, Oxy, the IOH ETF is oil. There's a lot of catalysts potentially that can make this rip higher. The U.S. oil reserve is like super low right now since we've depleted it for political purposes. So hopefully we don't have a hurricane that wipes out some refineries on the Gulf Coast. Otherwise, this thing will go to freaking 150. But I mean, there's a lot of, once again, I'm just speculating. Like anything massive like that could have a positive impact on oil price. The Chinese shutdown that just happened, it really crushed price down here. It looked like price is going to try to rally over. It broke this 200-day right here and then immediately rejected down, and that was a nasty rejection, down from 97 to 85. I mean, that's a massive move down. The dollar, I'll just mention this briefly. I want to keep this very brief. I mean, we got 20 minutes to the bell. The dollar continues to make new highs. It just made a new high 2 days ago. Actually, that was yesterday's trading day. So keep an eye on the dollar. It has negative, as it rises, that's a negative implications for any U.S. company that has overseas exposure, because when they convert those euros or whatever back to dollars, they're going to be making less money. So that forex exposure and risk is there as long as this keeps moving higher. I think that's it for the video today. So happy trading. Hopefully I can make some videos today. That's my intentions. If I see some trades we're jumping in, I'll jump in and make some trades, and we'll all make some money today. So happy hunting, happy trading, happy Friday. I'm out.